Good day, guys. This is your friend Covenant Trader FX. And in this video, I'm going to be showing you guys the trades that I took this week that I just finished today, starting from 19th of January 2026 down to 23rd of January 2026. I'm going to be showing you the trades that I took with my trading strategy, CHRC, and with proof of wins and losses on each of the trades. So this week I took just about 5 trades. I'm going to be breaking down each and every one of them so that you can see and also learn from it. So this was the first trade that I took this week. So let's see, why was I looking to take this trade? Well, actually, at this point, what I was thinking was that price is bearish because I thought price entered a monthly zone and should be selling. But yeah, what do we have? Yep. So that was a loss. The mistake with this trade, yeah, and I'll explain why I actually took it down to entry now. The mistake with the trade was the direction. That was why I paused first when I was talking about direction. The direction is wrong. Why? Because the zone I thought price was selling from here had been used before, and based on the way I trade, I don't use zones that price has used before on a particular time frame. So, price was not bearish. Price was still very much bullish. In fact, price was not selling from a monthly zone. Price was actually selling from a weekly zone here on GBPJPY, and should definitely come take this weekly trade liquidity. And when price took this weekly trade liquidity, they had momentum absorption, W minus took out W minus, but I will still use a weekly zone. So price came into the weekly zone to buy. So this buy is supposed to keep going up from here. Not that I should be looking to sell here. I was looking to sell here because I was thinking, price was retracing from say 8 hour zone to come take sessional trade liquidity and sell from there. So that was the first mistake that I made. The second mistake was because this week is the first week that I'll be trading this pair. I just decided to focus on this pair for some time, or maybe throughout the year, depending, this year, and I'll carry you guys along on that journey. But the second mistake that I made was that when I came to analyze this pair, I was using Wanda broker instead of forex.com. So Wanda broker was giving me a lot of gaps, when I was checking my signals. So it was after I took my first and second trade that I switched things up, that I changed the broker to forex.com, and then I was able to get a more accurate data or price. So that was my first trade. It was a loss. I risked 0.5% throughout this week, basically throughout this week on the account. That is 0.5%. So that was a loss. So let's go on to the second trade. Okay, so this was my second trade here. This buy trade here. Yeah, so why did I take this buy trade? I took this trade because at that point in time, I was also still using the Wanda broker, and based on the price feed it was giving me, I didn't have a trade liquidity at this low here. So I thought price was selling from nowhere, and then it's a natural liquidity. When it took out this 1 hour trade liquidity, I was looking for a 1 hour zone, and this zone here, there was a zone here that I was thinking was a sure 1 hour zone. That was this zone, yeah. Yeah. Meanwhile, that zone, so meanwhile, the zone I was looking at to take this trade from, let's check the trade first. I-20. Yep. So I took a loss from there. Yeah. Um, the reason was because the zone I was looking to take the trade from was actually a trade liquidity, but that's the thing about trading HRC. How you generate your data matters, and that's why we advise people to use the futures charts if you have access to it, because it's more accurate than any broker's chart. But if you're trading minor pairs like GPY or other kind of crosses, it's advisable to be intentional about the broker that you're going to use. So basically, I recommend forex.com. That's a very good one. Wanda, Wanda was what I was using that gave me a lot of error at this point in price. So basically, my zone here was also carrying tribute, so I was wrong. So it's not until I took this loss that I eventually, I think I saw that. I think I had even started marking forex.com at that point in time. Started marking it because I'd already started, suspecting the fact that Wanda was not giving me the good pricing, because what I trade is top notch. So I was like, why am I taking this kind of losses? So yeah, that will take us to the next trade. And on that trade too, I risked 0.5%. That was 1% lost already for the week. Let's see. Our next trade will be. So guys, this was our next trade. This right here. This was our next trade. This buy, I'm going to play for you guys so that you guys will see how it went first. Let's pause it there for now. Yeah. So why did I take this trade? Well, remember, I already got my direction right. I already knew that we are bullish, not bearish anymore. So the only thing left is entry, and from here I already got that, oh, this low, this particular low here was not. So immediately after I took this loss, I checked everything again, my signal and everything, and I saw that this low was actually carrying a trade rate. So I'm still very much correct on. So and the trade liquidity that low was carrying was a closing entry liquidity, and the price was selling from a 1 hour zone. So if price is selling from a 1 hour zone, that means that my stop loss for this trade that I took, this is my second trade that I took a loss on the other time, was actually what price was coming for in the AC zone. And I saw that, I checked, oh, when they took it, what kind of absorption they have. So they had momentum absorption. So I knew that I'll be using 1 hour zone. So I knew I'll be using 1 hour zone to take the buy. So I checked beneath this this true liquidity here. Which 1 hour zone do we have? Which 1 hour zone do we have beneath that true liquidity? Okay, so this week was 1 hour zone. But one thing that I've learned, and that you get to understand very much in this video, is when you want to pick your zones, if your zone is inside a bigger zone, you can use your zone as the entry, but make sure you try not to use the low of that zone as stop loss, because price might want to play into this bigger zone. Do you understand? So that was how I took my trade. Although because I was was checking things. I didn't take it straight up from the zone. So it was already moving up a bit and price was already around there, you know. Oh, I think around there when I took it, yeah. And I put my stop loss here because, like I said, stop losses should be put at points of invalidation. Points of invalidation. So where am I targeting? I'm actually targeting this eye. And I also know, I also know that price should very much go higher than that, but I didn't want to chill more than, because I was thinking price could actually still retrace after taking this high, but for that day, I was sure that price would take that high, at least. So that's why I was targeting the high, and that trade was 5.3 hour. And let's see. So the trade started playing out, and when price got here, took out this high. When price took out this high here, price started retracing. I was like, oh, so where are you coming to now? So where are you coming to? So I checked on a lower time frame around here, and I think I saw something interesting. Let's go to 1 minute because I took another entry going forward. Yeah, I remember I saw something interesting. Yes. So when I checked around here, I saw that price bef I saw that price engineer the 1 hour zone. I don't want to take our time in this video, but let's take a look at my indicator to check 1 or 2 things. So price engineer this 1 hour zone, went back to the side and started coming down. So basically what I did there was just a zone walk actually. Look at this. So price was retracing, and I saw this zone here, this week to week on 1 hour time frame. If you've not seen my video on zones, you can check it. It's either I put it on the screen here right now or in the comment section, in the caption of this video, or in the comment section, sorry. So this 1 hour zone, that was actually the zone I was looking at. Let's zoom a bit so that we can see things more clearly in that area. This 1 hour zone was actually the zone I was looking at for the continuation because the low was not a true liquidity. So, but if I'm entering from this week to week, let me remove this first. If I'm entering from this 1 hour zone, which is the third generation zone, why is third generation zone? It's because price entered it and sold before taking it out. So that zone is like some of you call a breaker block kind of thing, but is with better understanding. You understand what I'm saying? So yeah, price entered it, but I'm smarter than just taking unnecessary stop loss. So like I told you, it's not even cunningness, it's just understanding. If you have the understanding, I've told you if your zone is within or around a bigger zone, you can use your zone as entry, but that bigger zone, I'm looking at this week to week here, should be your stop loss. So this dire zone will help you not to miss the trade, but this larger zone will help you not to take unnecessary stop loss. So let's see. Price entered my zone. Remember, I was still on this trade. I was still on this particular one too. So I entered this one too. Entered this with 0.5 percent. This also with 0.5%. So yeah, that was that for, because I closed my trade around there when price started rejecting a bit on this candle. I closed the two on this candle, even though I knew that it could still do more, but yeah, I wasn't ready to indulge anymore in any kind of, because I already mapped out this 1 hour zone here, and I knew that I could price could use it to act funny. So yeah, um price started retracing from here, and when price started retracing, I marked out something here, but I was a bit busy, so I missed this continuation here. There was supposed to be a continuation from this zone here that I missed, and that's fine. So we've already taken 1, 2, 3, 4 trades this week. Yeah, that means I took a trade on Monday. I didn't trade at all on Tuesday. I didn't see anything I was looking for per se. Um, I also missed the trade on Tuesday. I just remembered I missed this trade here because I'm not sure what I do. Oh, then I was still using I'm not sure. Yeah, then I was still using the Wanda broker data feed. So I wasn't even seeing clearly around all this place up until the second trade too. So yeah, that's one on Monday, one on Wednesday already, two on Wednesday already. Okay, three on Wednesday. That's interesting. Yeah, so let's go. Let's go to the last trade of the week. So guys, here we have it, the last trade of the week. This was the trade on Friday. I wasn't doing anything on Friday until we had this price action here. So, and I understand very well what this means, even before I came into Jersey. For some of you, you might not understand, but stay with me. Stay with me. So when price went further than this target, and I was expecting to take this side too. So price wanted to retrace, you know, um, and I understand when you see this kind of candle, I understand that when you see this kind of candle, it means price either wants to reverse or do a deep retracement. That's what that means. This candle, I call it the personal name that I gave it. I think I gave this name 2021 or 2022. I call it the sweeper candle. I call it the sweeper candle. And what it does is that it sweeps both sides of the market before price actually starts moving in the direction of the other side that it was coming from before. In this case, now price was coming from the buy side, and then it sweeps to the side, and price will start selling most likely. But that's not the sole reason why I took my trade. I have a model, you know. So after price did that, I was waiting. I was looking at where it started buying from here. It didn't make much sense as a zone. So what I waited for was that I waited for price to engineer let's go to, let's say 15 minutes so that I can show you something more clearly in that area. I waited for price to engineer a true liquidity. There are two types of true liquidity in the Chelsea. There is the one I call the type 1 liquidity, where price already has formed it around the passive side of the market. But there's another one, I call it type 2, where price just engineers it around the aggressive part of price action. So guys, when price took this sessional liquidity, I just that they engineered after price was retracing back up, I just looked for an entire zone, and that's where I entered my trade from. And why am I targeting? I'm targeting this low. Why am I targeting this low? I'm targeting this low because my price is selling from here is not really that much clear yet. Like, because like the data, if I'm going to look at the left side of this, it will have to take me to like 2008, and it really is trading view cannot reach there for now, on a lower time frame like 1 hour. So even though I have premium, so That's why, but I checked all of that kind of trade rates like weekly, daily, and I don't see them sending price down. So I just presumed that it would be 1 hour that sending price down. And when I checked, when price took the first 1 hour closing trade rating, it did exhaustion. That means I will need daily zone. So this is the only daily zone that I have close enough. So I knew that price will most likely reach out for this low before even if it wants to buy, so that's why I put my take profit at this low. And let's see how that's played out. Yeah, and here we have currently for this week. So I closed this trade around here before the week closed. I closed it exactly around here. Yeah, so I got like 2.45 thereabouts. And yeah, around. So the reason why I closed this early was because of spread. This spread and this pair, GBPJPY, is a pair that is crazy with overnight spreads and weekend spreads. Not talk of weekend spreads. So to save my account because I've taken a loss on into once like that, because of spread matter. I thought I could hold that trade, so I'm decided this is a sell trade. As long as a buy, maybe we would have considered that, but this is a sell trade, so no. So basically, those are the trades that I took this week. So let's see how many RR we were able to get. This -1, that's -2. This is about 5. That's 5 plus -2, that's 3. This is about, let's say, 4. Even though it's 4 points, let's say 4. That's 7. And this is 8, 9. So that's around 9, 9 this thing. But basically on the account I was risking 0.5% on. I think I did nothing less than, yeah, around 8, 9% too. And like 8, 9, what's it called? RR. Yeah, that's very correct. So because I did like 4 point something percent on the account. So yeah, guys, that's that for the trades that I took this week. The reason why I risked 0.5 throughout was because I'm still just testing this pair out. So starting from anytime from now, depending on how things go. And I also have a risk management plan too. So and depending on my risk management plan, the risk might go up to 1% when we reach some level. So yeah, that's it, guys. I hope this helps you. See you in my next video. Don't forget to like and comment. See you in my next video.